Blake, good morning. We can't hear you.
Well, it helps if I didn't have my mic muted. So thank you, Stelios.
Morning, bro.
Good morning, guys. Good morning, traders. This is Blake Morrow with Forex Analytics, and as you can tell, I don't do this that often. So it's anyway. Happy Wednesday to you. And you're listening to the FACE webinar. Dale is out today. He's taking the day off as people mourn the 41st president of the United States passing, George Bush Sr. And so I thought I'd broadcast today because we still have some things going on in the FX market, and I'm going to be assisted by both Steve and Stelios, which you heard just a moment ago. They'll be back. They'll be back in about 30 minutes to continue on and take over for me. You know, there are obviously some things happening in the markets today, and we have the Bank of Canada rate decision that happens a little bit later this morning. That's going to happen at 10 a.m. Eastern, 8 a.m. my time, which may create a little bit of volatility with the Canadian. But what I'd like to do is I'd like to go through some of the majors and take a technical view of some of these majors. And we've obviously had a lot of news out of the UK regarding the legal documents being released, and the cable has been whipping around all around this well, what I still think is a bearish wedge, but you know, we held the 2660 support yesterday. We tagged it, and then we reversed, and we came off of that support this far, and I'm still not buying it here, meaning I'm not buying the bullish momentum that we're seeing with the cable just yet. But we are probing, or getting close to probing, some resistance. I think it'd be a little bit more constructive from a bullish standpoint if we got above 128.40, 128.50, all this resistance up here. As you can see, I have an alarm set at 120. 28.40. We've got as far as the cable goes, we've got 128.40 on resistance here. So even if I'm not at my desktop and I don't get notified here, I'll get notified via ForexAnalytix here, and then I'll get notified via ForexAnalytix on via mobile too, in case I'm directly not in front of my computer, which, you know, I have a few fail safes knowing that we're going to be up in this level. That doesn't necessarily mean that I want to buy it. I just think it'll look a little bit more promising from a technical perspective. In other words, I need to start watching it. But really the trick to all of the cable moving up at this point, at least pre next Tuesday's vote, is more a result, in my opinion, it's going to be more of a result of the dollar. So you're going to have the dollar weakening and the euro strengthening to drag the cable up, if you will. And I think that's going to be the key as far as trying to play the pound to the long side, at least ahead of next Tuesday. Is you're going to have to see broad-based dollar strength or weakness. Now let's talk about let's talk a little bit about yesterday, and I want to talk about a loss I took overnight. I've been sitting in this stupid Aussie New Zealand for weeks, really. My cost average was 106.25 or something, and the GDP numbers, and actually, let me take a step back. One of the things that has really kind of stuck out ahead of it breaking down last night is that despite all of the stronger Australian data, the weaker New Zealand data over the course of the last week. So if you go looking, just for example, go to last week really quick and just look at, like, the New Zealand trade balance was weaker. You had or didn't say much. You had I guess Australian capex numbers were decent. We had really a lot of price. Actually, I should go back the week even before that, because you have to go back to the previous week as well. So like the last 2 weeks that I've been trading this thing, you know, going back into the middle of November, it really hadn't broken out to the upside where it should have. You know, seeing the weaker New Zealand data, generally speaking, stronger Australian data, it just didn't break out to the upside. And last night we had GDP numbers that came in extremely weak out of Australia, and then on top of that revision, they were revised lower, and then we had some Chinese data that was released as well. And plus, you take like the whole U.S. slash China trade truce talks, if you will. We should have seen a bigger rally in the Aussie New Zealand. We gapped up and we just failed, and so, you know, I shouldn't have been surprised that it broke lower. Now, the weak GDP numbers actually broke the Aussie New Zealand lower, and we're breaking out of a pretty significant you know, triangle. Now I'm already out, so I got stopped out last night at 58. I think is where I had my stops at 58. So I think I got out like 57 by the time it, you know, pushed lower right through here. So I'm already out. The one thing that you know, and I have to take a step back and say it was worth the risk reward. I mean, you know, if you look at it from a risk reward standpoint, for me, it was like, okay, you get long here. Whoops, I didn't mean that was. Let me delete that. You know, you get long here, and your stop is here, and your reward is way up here somewhere. I mean, that's what I was looking at, and so I'm not upset that it didn't work out. I mean, I'm a little irritated that it didn't work out, just because, of course, you know, when you get out of a trade and it doesn't work in your favor, you know, it's like, oh, that sucks. But, you know, I'm willing to take those types of risk reward trades each and every time. I don't even really bat an eye at it. So it's just a shame that I got stopped out. But the fact of the matter is we are breaking out of this triangle now. So, you know, we are breaking lower. Now, we had a false breakout to the upside previously and reversed. We've had that actually here too. Now, could we reverse here and start heading up again? It is possible. It is. However, I'm not buying it, and unless I see us come all the way back above 106 and maybe 106, you know, 40 or 50, I might actually think, okay, that's a false breakdown and I want to be long. But being long right now, I don't see any reason to, you know, other than, you know, we have some divergent relative strength, but, you know, if relative strength wants to break down even further, it can. I mean, it wouldn't be unheard of and really confirm this move lower. So I just wanted to walk you guys through what it looks like, you know, when you take a loss that's worth taking. I mean, you know, you have to understand that you're not going to make money in every trade. When there's a good risk reward setup, you take it. And if it works out, that's great. And if it doesn't, well, you move on to the next trade. And this is exactly what happened to me. And like I said, I'm irritated that it didn't work, because of course I want every trade to work out, but it's not, you know, reality. So in my opinion, it was worth taking it. It didn't work. So, you know, I move on to the next, and that's just that's just part of what we do, and hopefully, you know, walking through like the thought process of what I did here and taking a loss makes sense to you guys on why I did what I did. So anyway, let me know if that helps or if it doesn't. And by the way, I am reading comments today. I'm paying a little closer attention since I'm quote unquote hosting right now. All right, so I just wanted to walk through that particular trade. Now, I did also last night and narrowly avoided my stop too, which you want to talk about another risk reward trade. I actually did take the Euro New Zealand on the long side. Now, we were, you know, trading right here. I have my stop at 28. Look at the low, it's 29. Matter of fact, my stop is 28 and 1/10 of a pip. So, I mean, I missed my stop by literally 1 full pip, and we bounced. Now, one of the reasons why I got long the Euro New Zealand is just because we were up at we were down at channel support, and I thought the New Zealand would underperform the euro because of the Australian numbers. I figured both the Aussie and the Kiwi were going to be weaker. I could have went with the euro Aussie that was already had already filled the gap and was moving higher. This would have been an equivalent choice. But I ended up going long the euro New Zealand just because I've got a vendetta now against the New Zealand dollar personally. So it is officially acquired the title of POS again, piece of salvation. Yes. Anyway, resistance now is at 164.25, and if we get above that, then that should release a little bit more upside in the euro New Zealand. So I did pick that up last night, which is good because it's helped already alleviate a lot of the losses that I took overnight in the Aussie New Zealand. But let's take a look at some of the majors, because that's what really we're here to deal with today. So as far as the euro goes, we had a really steep sell-off yesterday with the euro because equities just reversed aggressively. Now, if you saw the equity markets, sell off, they sold off and broke down. I mean, it was out of nowhere. There was it was just a really big reversal, and it kind of blindsided everybody in our office over at Gellos. We were like looking around going, wow, where did that come from? Like it, for no reason. And I think it took the market aback. Now we had some news out of some reaffirmation of the U.S.-China trade talks last night, where China said, hey, we're going to do everything that we said, and we're looking forward to continuing these talks. And I forget what the specific verbiage was, but that helped the futures off the lows. Now, futures closed this morning, actually, I think in about 15 minutes. So the S&P futures, I believe, are going to close here in a few minutes and then be closed for the day. But it helps stabilize the sell-off. Now, notice we hit the 618 retracement. And also, if you look at the S&P, it stopped at the 618 retracement once again. So this move right here, just so you guys can see it, that is the 618. You can see it right there. I still think the S&P has got a good chance of heading up in this direction. So would be up. There we go. So that's where I think eventually stocks are going. But this is definitely a setback here at the 618. But China comment last night kind of put a backstop underneath the market, at least near term. Excuse me, just getting a drink of my coffee. So with the sell-off in equities brought in dollar strength. So if you saw the dollar, yesterday, we strengthened off of, pretty aggressively off of this triangle support. And now we're pulling back a little bit, and we are in a triangle. So, when you're dealing with the dollar, just keep in mind we are, range bound. And if we're going to continue this with the general trend, it's going to be higher. However, I have to point out with the dollar, this is really a big deterrent for dollar bulls, and this is a big problem at this moment. Do you see this? This is relative strength on a daily basis, right? Confirming, failure, relative strength divergent, make a new high, relative strength is continuing to diverge, which suggests that we are going to fail, or there's a higher risk of us failing. Because usually you take a triangle pattern and you go, okay, well, that's going to continue the overall trend, which it can happen. I mean, if you ever doubt that price can supersede a divergent relative strength, if you ever doubt that, just go look at the dollar yen, go back to 2012 through 14, and go look at this chart, and then go look at divergent relative strengths the whole way. You go look at a daily chart and just go back test it. So don't think that price can't go higher, but the risks are increasing that we actually roll over. But I won't be convinced that the dollar is really rolling over until we break through like 96.50. You know, we break through 96.50, and then this opens up the doorway for, you know, much broader pullback in the dollar. Now there are comments, there were quote unquote sources from the ECB saying that I forget what the comment was, that they're looking to normalize rates, something to that effect. But there are always sources, never a specific person. It's just sources. But because of that, it's you know, put a little bit of a bid underneath the euro for right now. Now, talking about the euro dollar, we still have this big inverted head and shoulder pattern. However, because it's taken a long time to develop this right shoulder here, you know, if you look at the distance in time, you know, so you can go like this, right? Okay. It's about symmetrical at this point. We're getting close. So in other words, if the euro is going to break out as an inverted head and shoulder pattern, it has to do it like now. I say now. I'm like talking like this turn that you just saw in the euro last night. It's got to continue from here. Like we need to go hit 114, 114.50 and start breaking out to the upside. If we can do that, then the inverted head and shoulder pattern that you see here is symmetrical, right? And that makes it okay. If not, then we have a triangle. And so if we have a triangle, and let's say we do break out to the upside, I won't be looking for this type of extension, which would be a full extension of an inverted head and shoulder pattern. I would be, you know, actually targeting something maybe a little bit less like this, you know, or maybe something like this. Yeah, something like this. Like I wouldn't expect as much if it's a triangle breakout versus an inverted head and shoulder pattern. I'm just kind of roughly, you know, showing you guys what I'm expecting. So if we like, let's say, and I'm heaven forbid if we continue to consolidate like this for the next week and a half, but let's you know, let's consider the fact that we could, you know, we could continue to consolidate for the next week and a half, and we tighten up like this, then, you know, what I am looking for is a much smaller move out of the triangle versus a big inverted head and shoulder pattern. So anyway, just some food for thought. Okay, let me delete all this stuff now that I've made a mess of it all. Okay, let's go over to the cable. So the cable, again, still a bearish wedge. I think I already talked pretty extensively about this, but bottom line, 128.50 needs to be broken. And until that happens, I'm not convinced about, you know, any type of pound bullishness at this point. The Aussie, we filled the gap and then some because of the weak GDP numbers. Now, because of that, we've pulled back to the 24% retracement, and we've held. So you can see that that's, you know, that's held pretty well. Now, that doesn't mean we can't, you know, oh, I'm sorry, we were past the 24% retracement. I need to, let me change this to a different color. Okay, there we go. So we're past the 24% retracement. The 38% retracement comes in at 72.50. That actually looks fairly reasonable to be tested. We could do this, you know, so we might drop a little further, especially if the dollar is going to weaken across the board. That may happen. So that's some food for thought there with the Aussie. The Kiwi still holding up pretty strongly. We did reject the 161% extension yesterday. We rejected it pretty hard, and then we've pulled back, and we're pulling back towards the breakout point. So the 69-cent level is pretty big for the Kiwi today. Okay, let's talk about the Canadian, since we have the Bank of Canada. Hold on really quick. Sorry, I'm just saying we have oh, just so you guys know, we have Greg is going to come in today. So
yep, Greg is joining in.
Yeah, Greg is going to join us today. So you guys are going to get an Elliott wave perspective on the market as well. So that's good, right? So let's talk about the Canadian. So the Canadian, if you guys use ForexAnalytix, you were notified when we hit up here towards resistance. I actually shorted a little bit of dollar Canadian, just with stops above this trend line because we filled the gap, and we have the Bank of Canada today. So if the BOC comes in a little bit more hawkish, then that's going to put the dollar Canadian a little lower. And with crude stabilizing and gaining some strength here, well, it's down right at the moment, but with crude stabilizing, I think the risk is the dollar Canadian comes back down towards 132.50 or excuse me 132.20, 132, maybe even 132 the figure. But again, this was a good risk reward short. You're risking up here, you're risking 20 pips to make 50 or 60. So risk reward still isn't bad at this point, but just keep in mind that Bank of Canada is going to be out in about an hour and a half. The US dollar Mexican peso. Now this one's been extremely messy, and remember, there's a new president in town in Mexico, and AMLO is a wild card almost as much as Trump. So I think people are a little hesitant buying the peso at this point. I personally, I'm not trading the currency because I'm worried that stocks eventually are going to come off, and if stocks come off, then oh wow, S&P futures have just hit new highs. But if stocks come off, the US dollar Mexican peso might rally some more on risk aversion. If stocks continue to recover, that should put a little bit of a bid in the peso and drop the US dollar Mexican peso. But at the same time, do you really want to be buying pesos? So it's a really tricky pair to be trading at this point. And I know for me, I'm a little concerned about it. Let's take a look at the Swissy. Swissy's range bound. Norwegian krona, I still have a little short on this, which is fine. This is still coming out of the descending wedge. And again, if the euro heads back up towards 114, the US dollar Norwegian krona should see 845, and I believe eventually 840, maybe even lower than that. And let's talk a little bit about the dollar yen. So the dollar yen was our chart of the day yesterday. So if you look at our blog, the chart of the day yesterday was the US dollar Japanese yen as we hit the 1-year trend line. Okay, so we hit the 1-year trend line, and we've bounced already. Now it's just a consolidation. Again, it's really tight consolidation with the US dollar Japanese yen. I have no real bias on the dollar yen until we get above here or below here. At that point in time, I'll give you more of a bias opinion. And since you guys listen to this free webinar, even you might find out 16 hours after the fact that I became bullish or bearish. But that's really what I'm looking at. And of course, I want some supporting reasons to be bullish or bearish as well. But if you're part of the ForexAnalytix community, you'll know that way ahead of time. And I'm going to leave the rest for my colleagues Steve and Stelios and Grega, because you're going to get an Elliott wave perspective of the market, which is great. Grega only comes on maybe once or twice a week. And I think for those of you that haven't heard him, you're going to really enjoy him. And for those of you that have heard Grega Horvat, who's our in-house Elliott wave technician. So if you use if you look at Elliott wave analysis, like here on the euro, I'm not going to go through the counts with you right now because he's going to be here to talk about it. You're going to love sticking around with him. Now, before I go, I want to mention, if you guys do not or have not looked into Forest Park FX, do so. If you want to be part of the ForexAnalytix community, and you want to be involved in the reimbursement program where you can use, your trading to help subsidize your cost of ForexAnalytix, and you do not live in the United States, make sure you get a hold of them. There's their Skype and their email right here. Just reach out to them. One of the two principals will get back to you. The rest of their team is more of technical people, but they will get back to you. And if you're in the United States and you can't be involved in the reimbursement program, you should still talk to them anyway, because this way you can get part of a cashback rebate program. So make sure you get a hold of Forest Park FX. They are very much in line with what we do as far as just wanting to help the customer make money. They're in line with our ideas and our philosophies. So they're a great group to talk to, and I really have enjoyed working with them for the last year and a half that we've been working specifically with them. I've met the principals there in person multiple times, and I think the world of them. So make sure that you chat with them. All right, Steve, Stelios, good morning, guys.
Good morning, Blake.
Good morning.
You know something?
Hey, how you guys doing?
Good.
Good, mate. Good.
Hey,
I remember the other day that
we got a question. I'm sorry. Mark says try using a Forex heat map to identify currency strength against the rivals. No, I don't use heat maps. That's past tense. It's already happened. I want to know what currency is going to be the stronger currency of moving forward. So I tried using a heat map probably when I was trading equities, maybe 15 years ago, and then I tried it again when I tried to dabble in equities again, like maybe 10 years ago, and I'm like, this is all good, it's all, I want to know what's going to happen before it happens, not already, okay, great, this currency is already strong. Well, that's fine, but by the end of the day, that's probably not going to be the case. So, and I mean, with Bloomberg, I see it all right here anyway. Personally, I can see exactly what currency is the strongest right now against, and percentage-wise against the market. But that really is not even, my eye doesn't even venture into that area ever throughout the course of the day. So, not relevant for me. Anyway, that's just my opinion. Sorry, guys. All right, so I'm going to pass it over to you, folk. And I want to wish. Huh?
I just wanted to say that it happened that you were speaking about amazing books with Stelios and Meroni the day that you had the interview the other day. So it reminded me, when you talked about the loss, it reminded me of a very good line that you will find in a Maastricht book, which is The Reminiscence of a Stock Operator. Everybody knows that the character there is, in essence, Jesse Livermore, one of the biggest traders of all times. So I will never forget one of the best lines he has said is that, a loss never bothered him after he took it. He actually forgot it overnight. But what he had said is that being wrong and not taking the loss is what did the damage, not only to his account, but also to the soul. So I think that's one of the biggest lessons having to do with trading mentality, and what Ronnie was also mentioning about how important it is. And but one of the elements that distinguishes big traders from other traders is that, they have a well-defined risk-reward ratio and they're good money managers. And I think, that's A to Z. And that's in essence what Jesse Livermore was referring to.
All right, guys. Hey, good luck today. Great comments. And Jesse Livermore is a living legend for sure.
A dead legend, but
no, his legendness lives.
Yeah, that's for sure.
That's what I mean. That's what I meant to say. All right, guys, have a good one.
All right, you too.
Bye-bye.
Steve, before we go on, before Gregor comes, just a couple of things I want to
here, but go ahead.
He's already here. Only a couple of things I want to
But it's okay. Go ahead.
First of all, we had something we didn't mention yesterday. You should have. We had Italy, who seemed to be caving amid the pressure from the EU, and they're contemplating lowering their 2019 budget deficit target to 2% from 2.4. we have discussed this in length, haven't we, about, it's just a number. That's why the EU actually today said, they're asking for a credible budget commitment, whatever the hell that means. But anyway, there it seems that
so they can't be possibly asking it from the Italians then.
Yeah, I mean, are they getting guarantees on the back of it? I don't know. But basically, the Italians seem to be taking a back step on this. And okay, the other things that happened.
If we have any Italians listening in, I hope you don't take any offense. I would be saying the exact same thing if it was for Greece.
We are worse. We are worse, my friends.
We're actually worse. Yeah.
We know that. The other thing clearly that's happening today is the UK. We had three things that happened. The first one yesterday, the European Court of Justice ruled that the UK can actually unilaterally withdraw Article 50 without getting approval from the other 27 member states.
I saw that. It's actually it's quite important because it means that they can do a 180 turn. On their own volition instantly, no questions asked. That's it.
Yeah, it's a low probability scenario, but in case it happens, there are no obstacles, which is one thing. Then we had Dominic Grieve, who is one of the Conservative MPs and a hardcore Remainer, he had put a bid to amend the withdrawal agreement, and he won that bid. So that will basically give Parliament the opportunity to continue debate on Brexit after, people are taking it as a granted that after May's deal is voted down on December the 11th. So if, when that happens, he won this bid to actually give Parliament the opportunity to continue the debate and to see, wherever that leads. So that was also, the market took that as a slight positive, I guess. And and then we had yesterday the big one, which was the contempt vote over the Brexit legal advice that Prime Minister May lost by 311 to 293 votes. It was tight, but she lost it. And all the details are coming through today, and it doesn't look good for her. I mean, it's something she could have just.
Many people don't know. So explain, please, what that means.
Yeah. Basically, it had been kept secret what was said in terms of the legal advice on the back of all the Brexit negotiations,
and now they have to disclose it.
And now they have to disclose it, exactly. And even though she could have disclosed them before, with I don't see how she thought that we would never get to this point here. We were always getting to this point. So this way now it's become such a huge deal. And the big point about it is the Ireland backstop. And the way it's been agreed between the UK and the EU, to summarize it, is that the backstop, as it is now, it does not provide a mechanism for the UK government that enable them to exit it. It's something that seems that it can endure, indefinitely, and it basically locks the UK down in a situation where it just can't. It's very difficult for them to get out of it. I mean, I haven't read all the legal points on it, but it just seems from all the commentary, it seems that it's something that May has just given so much away on this issue and tied the country down to basically the European Union's wishes, essentially. So it's just something that I think, and I think the general spirit is that it's really negative for May in particular. It's something that can be renegotiated, I guess, in the future. But as it stands, it's just, I don't see any MP who would vote for this. I mean, it's really, obviously, apart from the hardcore conservatives who are always going to vote for whatever May suggests. But it's just something that looks really like a bad. Yeah.
The problem, though, that once you make some concessions, even on the negotiating table, even before you sign anything, unfortunately, that afterwards is being considered as a basis of starting the next negotiation, right? Which is definitely so. In part, it is somewhat binding, right?
Yeah, absolutely, man. It's anyway. Let's see how this goes. We still have 6 days until the vote, but really things are not. They're not looking good, are they?
No, yeah. I mean, they were never looking really good. They just look even worse.
Yeah. I think the whole question is now, and one of the reasons why I think the pound is actually quite resilient is that the markets are looking at what's going to happen after the 11th, because this thing is not going to get voted. That's almost a given now.
Pound, by the way, you know, just barely held on a daily closing basis yesterday, this ascending trend line support, and today it's rebounding like from there. But as I have been saying for a long time, it looks to me like the next leg will eventually end up being lower now. Let's see what the catalyst is going to be. I don't know if it's going to be the no vote or something else. We'll find out. But let's see what Gregor has to say about that. So Gregor, since we close this you know, macro section with talking about the UK, why don't you start by having a look at the pound and tell us what you think about it? Let me pass.
Hey everyone. Hello.
Hey mate.
How are you?
Hello, Gregor.
Good. How have you been? Happy now that Modric got the.
I'm not really sure, to be honest. So I would be more happy if someone from Slovenia will win it. But next time, we Slovenians are more now focused on Doncic in NBA because he is a really good player for.
Yeah, he is.
Okay, so.
I still can't see you. Oh, now I can. Okay, perfect. So what do you think about the cable?
Well, I think that most interesting technical reaction in combination with all stuff around Brexit is this spike, very minor spike below these August levels. Okay, so we have seen just a few pips decline through there, and now we are recovering. And as you know yourself, looking at this price action, this decline down from September highs, I think it's really choppy, overlapping, can be even maybe some kind of diagonal in progress. But it appears that bears are not that strong here, and that we still could be just in the middle of this corrective phase that actually started back at the end of summer.
Out of curiosity, I see here that you're probably looking for an expanded flat. Have you ruled out the possibility of a triangle?
Yes, because if that would be a triangle, okay, which could actually still be the case, but it's something else why I'm not looking for a triangle. If that would be a triangle, then I couldn't label this triangle to be in a wave 4. Right, because we haven't seen any solid.
Yeah, you're right. You're right. And triangles are only wave 4s, not wave 2s. Yes, or they can be Bs in a zigzag, which you think this is impulsive, so you don't think this is a zigzag, so you don't think it's a B in an ABC. Okay, got it.
Exactly, because I'm expecting a drop back towards 2016 levels, because clearly there was an overlapping recovery, and as you can see, current decline from from this year highs. I think
is very impulsive. Yeah,
exactly. So I think that this is just a pause with an ongoing downtrend, but either we will see a higher resistance retested there around that wave A. So if we are really in a flat, then you know that wave C should be very sharp, and normally it will take price back to this ending point of a wave A.
Except, of course, if it proves to be a running flat, it can prove to be a running flat, and then maybe we don't get a new high above
it. It could be even some kind of a WXY or any other combination. But for me, the important is that I will try to turn aggressively bearish on cable once I see 5 waves rally within wave C.
So for people that don't know, flat corrections are 3-3-5 corrections, which means that the last leg of a flat is an impulse. So and that's what usually makes its price action very deceptive. Because
the correct wording, the last leg of flat is not an impulse; it's a motive wave, because an impulse does not have an overlap between wave 2 and wave 4. The motive wave can have the overlap, which is called an ending diagonal. So an ending diagonal is a motive wave.
Yeah, but we're talking about a smaller degree. Okay, that's not an interesting conversation for people that don't know elite waves, but we're talking about a smaller degree. So if you isolate, like, you know, the C wave, it's going to be an impulse. It's not going to be, you know, an impulse on the larger degree, but it's going to be an impulse. I mean, it's not going to be an ending diagonal, because motive waves can even be diagonals or impulses.
So that's why it's important. The correct wording is that wave C can be a motive wave, because it either can be an ending diagonal or it can be an impulse.
You're right about that. It can be an ending. Yeah,
so
that's right.
That's what I'm trying to highlight.
But if it proves to be an impulse, you know, that makes it very tricky, because it's going to catch a lot of people long, probably at the worst possible level before it turns lower, right?
Yes, so definitely I'm expecting a retest of 38.2%. So from there, I would be looking for more weakness, and something similar maybe could be also still the case on euro dollar. If we go to this one, I know that euro dollar is somehow on a no man's land. So if we just take a look at this price action, you can see that actually since start of November, we didn't saw any real breakout. Actually, we are just consolidating in this roller coaster ride. So I'm still tracking actually two wave counts. The first wave count and my primary count is still somehow that we may see a push to the upside, but I would have to see 1470 bullish level to be taken out. Okay, so this would be
confirmation. Yeah.
In such case, as you know, this could be also then head and shoulder confirmation, head and shoulder low. So I'll be looking for more upside with this type of non-analysis as well. On the second count, because we are in the middle of this as at no man's land, the second count, of course, that we also have to consider is meaning more downside for a wave B corrective leg that is part of a very big sideways pattern. So if we take a look on this daily chart, so the idea is either we already bottomed here for a wave B, or we will see maybe just another push down and then we turn to the upside. But I think that once again, because this decline is very choppy, overlapping, not strong, definitely is not looking strong like we have seen maybe here, right? So for me, that's a very strong impulse, and current price decline from September high is definitely not looking the same. So I think that this can be a corrective wave B and that market will maybe turn to the upside. Also, if I just a second look at the bonds to give you the perspective why I think that euro dollar could rally.
Yeah, I know exactly what you're going to say. We reached a very, very interesting juncture of resistances.
I talked about this also in past webinars. So actually, why I said that bullish count for euro dollar still could be 1-2-1-2 to the upside is because if I'm on the right side with this count, okay, which is actually a triangle in progress here on bonds, which means we completed wave A back in February, wave B, wave C, and now we also see clear free wave rise for a wave D.
And by the way, we tested at the high today was exactly at the 78.6 from the previous leg lower. So from wave C lower, that was the 78.6.
Okay, that's good to know. And also what is very important is that wave B, let me check where this comes. So wave D or each subwave in a triangle may stop at 61.8%, but not compared to the previous leg, but from another leg. Looking back. Okay, so I'm taking distance of a wave B, and now we will check where we get the 61.8. So I take this distance, project it here, and you can see it's a little bit higher. And what is probably the most interesting to me is that it comes in right at this trend line. So generally speaking, of course, we may not reach this level. Maybe we are already at the turning point, but the idea is that we are waiting on a free wave setback for a wave E, because triangles are made by A, B, C, D, E subwaves. So if that's going to be the case, then if we look at the euro dollar at the bottom, then you can actually see that Bund is on the rise. Look at this leg from November lows. At the same time, euro-dollar is now in a pullback, and also we have seen a nice move to the downside in the last week or so when Bund moved sharply to the upside. So I'm thinking that if this is really an ABC up here for a wave D, and that we will see a reversal down, that euro-dollar will stabilize and maybe move sharply to the upside. So I'm still thinking about this scenario, and of course, if we see, as I said on the 4-hour chart, a push towards 1470, then this would be very strong price for me to really look at this first count and say that
speaking of the bunds, first of all, I agree 100% with you. I was talking about the bund and that it's reaching resistance, so we need to be careful. You know something though, I see that the treasuries might have a little bit more to run, because besides checking ZN, I was actually checking at the US 10-year yields. So, you know, I was mentioning that the 10-year yields had a very nice rectangle formation, in essence, had created the possibility of a double top, which on a break below 3% got triggered. And we saw an acceleration lower from there, and the target for the yields now that we actually broke below this double top is roughly at 2.8%. So do you see the possibility that perhaps the treasuries might overperform the bunds for a short period of time, so we can first hit the yield target? Or do you think that the treasuries are going to turn around at the same time?
Or maybe both will, as we looked at on the bunds, as you know, those 61.8% is still a little bit higher. And
so
also,
you mean both of them might move a little bit higher? Yeah. Okay.
And also, I have here this 10-year US note. As you can see, I'm tracking a flat correction, and now I'm looking for a 5-wave move up into this former wave A resistance. So actually, at the same time, we may also see stocks remain under pressure. I also posted this chart on Twitter last week, and I warned about this potential sell-off on stocks, because as you can see, it was a perfect negative correlation, which is normal between 10-year US notes and the S&P 500. So if we take a look, not going back too far, but only from October, 10-year US notes were up, here where S&P was down, and then we have seen similar negative cycles actually till end of November, when both started to move to the upside. So that was my wake-up call that this bull run on the S&P 500 is going to be limited, because at the same time, with a combination with the Elliott wave count on the 10-year US note, where I see a flat correction, meaning more upside, I suspect that sooner or later that the S&P 500 will find sellers. And also, if we take a look at the wave count of the S&P 500, you can clearly see that this recovery actually from October has been made by 3 waves. It could also be still a triangle in progress, because we haven't seen a break above this high.
We might get a D and we might get an E, so this choppy price action might go on for longer.
Exactly. But what is really interesting, that this with a flat, which means a completed wave B, will take us slower for a wave C back below these October levels, and then maybe we'll see a bounce. And a triangle, for high discount, and a triangle count would also suggest the same thing. A, B, C, D, E. And then we, see move to the
actually,
downside.
If it is a triangle, we might get a more aggressive downside target, right?
Actually, it could be something similar. I mean, maybe we'll get something, maybe we'll get just a spike below October levels, and then we'll reverse, which from a psychological perspective, somehow I hope will happen, because then I think it will be a very interesting buying opportunity if we see a reversal from a new low in 5 waves. Okay, but so maybe we'll not see such a deep levels, but the important is that we go step by step. So firstly, let's wait on this new low, and then we see if we get any solid bounce from there. Okay, of course, there can be price decline can even take us back to these lows from February, as you can see, or even lower. So the important is that once we see a new low, that we wait on a 5-wave rise. Okay, and also if you take a look on DAX, I think that this one is also in a similar situation. It's consolidating. What is the most important, that even after this spike to a new low here below October levels, this recovery was overlapping, right? So if this was an overlapping and this is corrective, then clearly this is much stronger price action. So despite I'm labeling it as a wave D, it tells me that bears are much stronger than bulls. So I'm expecting more weakness after a pullback.
Absolutely. And if you want to see this as, from a simple basic technical analysis perspective, this is a descending triangle. So,
yes, sure.
We know statistically that descending triangles, are prone to breaking to the downside. So I do agree with you. I remember that you were bullish the previous time we spoke about the DAX, but it was still looking lower. You had your reasons because from an Elliott wave perspective, there was a bullish count there, but I still thought that, there is more downside to come. And I think that now by viewing it as a triangle, you agree with that perspective. I'm looking for a move towards at least 10,800. But most likely, I would want to see lower prices. For example, I would probably target also 10,500 as the next downside level. And in any case, as long as we remain below 11,800, I think that we have to give the benefit of the doubt to the possibility of a continuation lower.
Of course. And if we are on the right track, then this, again, same with the S&P 500, then if we get a bounce from these levels, I think that there could be very interesting new buying opportunities in 2019. After all, maybe 2018 was a year of consolidation, of some fear on this market. So once this settles a little bit, I think that new phase, again, bullish one, could occur in 2019. And after all, stocks are in very strong multi-year uptrend. So why sooner or later we wouldn't resume this this cycle actually?
By the way, if you want extra confirmation, just have a fast look at the FTSE. You'll see that the FTSE has also built a symmetrical triangle actually, which also shows that the chances of a continuation lower from there are also high. You'll see it immediately. It doesn't matter if you've drawn.
Also, I'm looking at what I wanted to add here on DAX is I'm tracking, and as you know, I'm always paying a very close attention to gaps on DAX. Yeah. So once those gaps are filled, they normally cause a new change in trend. So I see one open gap here at around 11,450, around there. And if this is really a triangle, this is also perfect zone for this wave E to be completed. So I will be carefully watching what will happen, of course, if we get up there, and then we'll definitely consider some short opportunities, because after all, I will have another approach to the market, why this market could sooner or later continue to the downside. Of course, if we get bounce. And also I see one unfilled gap here from November 21st. So if we see this one filled, this one could still bring prices to the downside to fill it.
Grega, I know that we have Canadian data later. So what is your view on USD CAD? Do you see this as an expanded flat as well?
Dollar CAD has been in a recovery, but it's very, very unstable. You can clearly see that we have seen a lot of nasty pullbacks. Okay, and I really don't have any strong opinion or confidence in this one. but still we have higher highs, higher swing lows, so we are in an uptrend, and actually this uptrend may resume. But I like this latest developments where we could be finishing a wave 2 effect. But what I don't like too much is data that is coming out, and exactly it's coming out after this Sunday gap was filled.
Yeah,
it was filled on a pip, right? Here was a close on Friday. It was close at 93, 293, and here was the high today. High was 94. Now, I mean, this is not just a coincidence. You know, those gaps always brings a lot of attention, at least at my charting. So buying here, dollar CAD, I mean, could be really, really tricky, especially ahead of this data. So I would be carefully watching if we maybe see another reversal to the downside for a more complex wave too.
That would also bode well with. I've seen a nice turn in the USD NOK, which I don't know if you have a ready count for the USD NOK, but it looks to have rolled over so far. So if USD CAD resumes lower, probably that can help USD NOK accelerate to the downside as well. I don't know if you have a ready chart for that, and then we can talk about the metals and crude if you want.
I mean, I have dollar NOK here. I mean, it's a free wave decline. Gap is higher
so far. Yeah,
we broke lower out of this wedge, so I don't know. It's really...
yeah, because you know, if you take it from the wedge perspective, you know that from a basic technical analysis perspective, you expect the wedge to even retrace the whole structure, right? The whole pattern. So exactly. I don't know. I'm not sure either. I mean, both for USD CAD and USD NOK, I don't know. My gut feeling tells me they might move lower first, but as you said, it's very hard price action to read. What is not hard to read though is that once we broke that descending trend line in gold, is that we would extend higher, and as it seems now we are extending higher. My target is 1260. I don't know what are you looking for. So far, gold has channeled perfectly in this corrective move higher. Silver, on the other hand, has been bouncing off horizontal support area. It remains weaker. That's the channel I'm watching as well since some time ago. So double zigzag.
Yes, double zigzag, and I think that there is more upside coming. I think we still haven't passed this high from late October. It was at 1243. We have seen some resistance here, made a pullback, and I think that this uptrend may resume. And what is also interesting about the euro dollar is euro dollar came down aggressively, right? Even but crude oil, gold was still just in a small pullback. So if this was really just a temporary retracement and that those commodities are still in uptrend, then I think that gold could actually help to lift the euro dollar, or at least
do you think we've already broken out of the descending channel, of the steep descending channel? I think that the chances that crude has found a short-term low are very high. Do you also think that crude has bottomed in the short term? Do you think that the corrective move higher has actually begun?
Actually, I'm undecided, because this recovery was made by three waves, and also I think we have this valid open gap after G20 meetings. As you know, on Sunday, market gap higher continued even higher. So at least another push to the downside, I think, can be coming towards 51, and maybe then we get a bounce if this retracement will be in three waves. But what I think is that sooner or later we will see a recovery, because we are seeing a completed 5 waves of decline, possibly completed because of this broken channel to the upside,
and clear momentum. Clear momentum loss as well.
Yes. So, but maybe we will not. Maybe that's not a buying opportunity, because we have to consider that we are just stepping into a corrective phase. So either oil can just stay sideways, maybe we will not have any clear bullish signals to maybe to grab some money on the upside, because trend is clearly bearish, and we have to consider that any bounce will be seen as a corrective, and that sooner or later crude oil could continue.
It will fail. Yeah, it will fail.
Yes.
Yeah. My target is not very aggressive actually. My target is at 58.50, and I think that after such an aggressive sell-off, we can make it to 58.50.
Yes.
Tell me something.
I have something else. I'm just looking. Yes.
Yeah, we also have questions. First question came from Martin. He says that he sees that you have alternative counts as well, but what is your preferred count for the cable and for the euro for the next path? So I think he's asking for your medium-term view, because I mean it was more than clear to me that you're looking for a corrective bounce in both of them. But are you still looking lower in the medium to longer term as your main count?
On the main count, actually, I would say like this. I have received a lot of questions. Am I bullish? Am I bearish on euro dollar? And sometimes it just the situation where I don't have any strong bias. Okay, and I'm just, rather than going ahead of myself and saying that euro dollar is going up or euro dollar is going down, I want to see that one of my wave counts is confirmed. Okay, yeah. So I think that this is very important, because there are traders who want to trade, just, we already discussed this a lot in the past webinars. There are traders that want to trade one market all the time, but it's important to be very flexible. And if I don't see clear wave count on euro dollar pair, which means I will make more of the wave counts, more potential outlooks, and once one particular price will be taken out, then I will know which count I should track, and maybe then I will find an interesting opportunity. So at this stage, as long as we are sideways, as long as we are beneath 1470, 71, the bullish count cannot be confirmed. As long, but
no reason for you to commit to something that doesn't have very high chances. Why would you do that? And you mentioned, in essence, you mentioned two things at the same time. And let me explain. And that's why I keep, I always monitor a lot of markets. You mentioned two of the most important elements that a trader has to have: discipline and flexibility. The problem is that if you are monitoring very few markets, and if you're willing to trade very few markets, you will need to be a lot more disciplined, because, as you very well mentioned, Grega, there will be long periods of time that there will be no smart trade for you to take, which means that if you believe that, you can't exercise, as much of a discipline, at least give yourself the ability to monitor more markets. So through that flexibility, you can, jump to, better looking opportunities. Because if you're trading only a couple of markets, if you're only trading Euro USD and like the cable, there are long periods of time that, you either have to jump into trades that don't make much sense because you don't have a clear understanding of what's happening in the market, because the market in essence is moving sideways. And that's always, a market that you'd rather avoid. Or you'll have to stay for a much longer period of time watching at your monitor and doing nothing. So I 100% agree with you. And that's why I think it's important for people to keep an open mind and try to monitor more markets, because more markets means more opportunities to take trades that actually do look good.
Yes, exactly. Because if you will be just tracking one market that is jumping up and down, and you will be forced, because you want to trade, you will be forced to make a mistake, because you will say, okay, today I will trade, I want to trade something because you love this job, and sooner or later you will do a mistake because you will be trading the markets that actually you shouldn't.
I 100% agree. Speaking of markets that are tedious, we have our friend Donald here asking, what's your view in the USD yen?
Okay, temporary, I'm bearish. Okay, and I'm looking for a drop to lower prices, at least beneath 112.30 level. Even if this would prove to be a free wave decline, I still think that there is room for more downside as long as we are trading below, I think this was a high on Monday or Sunday. So I'm expecting more weakness. And also, I think that Nikkei is very interesting. So here we have Nikkei. Notice that Nikkei index made only 3 waves of recovery after this gap above this November 8 swing high, and then we turned aggressively lower, as you can see here. So I think that Nikkei index is back in downtrend. We will see more weakness coming, and at the same time, this could also send dollar yen to the downside as well, because you can see the dollar yen here made a sharp drop when Nikkei actually made this failure break to a new high and then turned lower. So I think that dollar yen, despite some kind of a sideways price action, it could be headed south because of Nikkei, which has a clearer structure.
I totally agree with you, and I had actually shown Nikkei the day before it collapsed, not only because this is an ABC, but there is a long-term ascending trend line that starts on January 2016, that on the first bounce on that A, we retested it, we back tested it as resistance, and we failed. So the second time that we were appreciating now, we came close to retesting it for a second time. We didn't do it, but we came very close. So I told people on this webinar that, listen, as long as this trend line is holding, I would be very, very careful, because if Nikkei gets rejected from here, I think that USD yen has a very high chance of following to the downside as well. So I totally agree with you correlating the two of them, because they are highly correlated. And yes, the Nikkei looks like a corrective move. Also, yesterday's candlestick in the USD yen looks a very nasty one. So I agree with you. In the short term, it looks like we're going lower, but other than that, I think it's a tedious market, USD yen. Now, what do you think about the DXY? So obviously, just by taking your view on euro, on cable, I mean your main view, as it seems, you also believe that the dollar index is going to fail from here. It's been stubbornly holding through an ascending channel, but momentum is clearly waning. So, Blake said the same at the beginning of the webinar. He expects it to fail. I expect it to fail as well. So I'm assuming you're looking at the same thing, right?
Yes, at the same thing like on euro dollar. I mean, we are trapped between important levels, swing highs, swing lows. And as long as we don't see any significant break out of these levels, I think that there is a valid chance for a decline or for this wave B rise to continue. So daily chart is probably the most important. I think that sooner or later we will see and get more evidences for a drop lower into this wave C of wave 2 correction that I'm tracking back from August 15th.
Okay. Now we have a question about the Euro Kiwi. I was actually showing, I think it was the day before yesterday, because yesterday I wasn't on the webinar. I was showing that people should start being a little bit careful with Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, because they seem to be completing 5 waves down.
Yes.
So a corrective move higher has already begun, I think. What do you think about it?
I'm not sure if already begun. We definitely
might have begun.
We definitely see prices in a 5th wave of decline. So if we make a clear, okay, so this is wave 5. Let me take a look where we see. So we are definitely at a very important level. What?
let's count the quality of wave 1 to wave 5 to see what it is.
I'm doing this.
A little bit lower, huh?
Yes.
A little bit lower. Yeah, so we might have one last leg lower. One minor leg lower.
Yes, exactly. So I would label this one. Sorry, wrong one. Wait just a second. This was probably a triangle. A, B, C, D, E.
E, yeah.
And now I am looking for a 5-wave drop here.
So probably we are at wave 4 of wave 5.
Yes, exactly. So pair remains bearish. But
if you look at the reaction of Euro-Aussie, though, there is a chance that Euro-Aussie has already bottomed. So let's have a look at the Euro-Aussie, because you'll see there is a much more aggressive reaction higher. So perhaps the Euro-Aussie is
let's not forget on Aussie against New Zealand dollar. So that's why Euro-Aussie may be bottomed, because Aussie overall it looks very weak against New Zealand dollar.
Yeah, and we broke down from a very, very key level.
Yes, I know. We have been looking for, I have this one here. We have been looking for this triangle. As you know, I was looking it already in 2017, actually, for this ABCDE triangle. And so far, I think that this breakout or this decline could just have been started. So there's room for much, much more weakness ahead, which could be one of the reasons why Euro-Aussie could be maybe bottoming. So when it comes to trading, I think that if someone is looking or waiting for Euro crosses to bottom to find some long opportunity, maybe Euro-Aussie is a better chance compared to Euro against New Zealand dollar.
Let's have a look at it in a short-term count. Let's see if it has actually bottomed. Euro-Aussie, I mean.
Yes. Definitely a nice bounce here.
Yeah. Feel that looks like an exhaustive gap as well. I mean, from a basic technical analysis perspective, this looks like what we call an exhaustion gap. The market gaps down, but it immediately comes back and fills it. So perhaps that was the last, the last hurrah from the bears there, and that perhaps got a lot of people trapped at the worst possible point in the market.
Same like on Nikkei to the upside.
Yes.
Yes. So actually, I'm looking at always when I'm tracking or waiting on a key reversals, I'm looking at the candlestick formations. And today, after 2 blue candles, today it is the strongest one. So if we finish the day here, I think that this could really be the case for higher prices. So looking at even lower time frames, watch out for a 5-wave rally. That's still not the case here, as you can see. This could be wave 1, wave 2, maybe wave 3, 4, 5.
This looks like a 3. It has the strength.
Yes, but it's still not completed. So as long as we are here above 54.50 around there, there is possibility that we are in new phase, but temporary corrective only. So
if we want to,
I would wait on a 5-wave recovery firstly to complete, to be visible.
And then a pullback.
I would not be buying in a wave 4. I would be waiting for that 5-wave rise, then wait on a pullback, and then look for buying. Yes.
Yeah, and if we want to combine a little bit fundamentals here, I would say that you very well said the break lower in the Aussie Kiwi, especially if we penetrate the low of wave D of that triangle, which is the absolute confirmation that the triangle is now a thing of the past, and we're moving past it. So we should expect a lot more weakness in the Aussie Kiwi. If we combine that with the fact that we still have a lot of uncertainty around Brexit, I would say that between the four pairs, Euro Aussie, Euro Kiwi, Pound Aussie, and Pound Kiwi, if you're looking to trade one to the upside, Euro Aussie is the preferred choice because you avoid this way the any unexpected news bombs from the side of Pound. And as you very well said, we have a very good reason to expect the Kiwi to continue overperforming the Aussie. So Euro Aussie, I think, is the choice, right?
Yes, definitely. I mean, from a clear technical perspective, for sure.
Okay, perfect. Let me see if I have any other. Oh yeah, we have one question from Catherine. She asks, what is your opinion on Bitcoin? What is your view on Bitcoin?
Just a second. Let me look. I have it ready here, I think. Bitcoin, just to find it. Okay, so Bitcoin is still in downtrend, and this downtrend will likely continue, I believe, because this is just a consolidation. It looks like just after this fear that was seen through November, we are just stabilizing a little bit, but it's normal, just a pause within a downtrend. So more weakness could be following after ABCDE pattern. So watch out for a drop. I think that 3,000 could be achieved maybe already in a week or so.
What is your larger count on the main cryptos now? I mean, Bitcoin, Ethereum, let's say. What is your longer term viewpoint of what's happening here in the market?
What I like is that actually real mania cycle back in 2017 was seen here from September till the end of the year, last year.
Mm-hmm.
So actually, we still haven't managed to reach this level, September 11 lows or so. So actually, sorry, this is weekly chart. So actually, there's still room for more weakness, and 3,000 based on the shorter term wave count when I'm expecting drop from a triangle, which means we could be seeing final push down before we see a larger, maybe just another corrective bounce. But the idea is, what I think will happen, we will not see any strong significant rise like we have seen in 2017. I think that this market will move into something more normal because a lot of traders learned a lot from these mania cycles, and I'm really don't believe that they will again try to ride this market and make money so easily on the upside. So I think that market will sooner or later turn back to the upside, but with much slower pace. And from a technical perspective, I would be expecting a free wave rally, maybe back towards 6,000, 7,000, once we reach these levels around 3,000. But of course, from a technical perspective, again, like we discussed at Euro Aussie, we also mentioned where on some other markets that we always need 5 waves of recovery from a new low or from a new high, 5-wave decline, before we may either say that low or top is in. Because you want to see actually low being made before you can say low is in. And that's probably the most important, because in such case, you will exactly know against which level you can be trading or where your stop loss should be placed. Because if you buy Bitcoin here, I mean, if you're trading 1 hour time frame, okay, then maybe you will put your stop loss below recent low. But from something more significant, you want to see a solid bounce on a smaller time frame in 5 waves, which is not the case yet.
Yeah, I agree with you. From a historical perspective, I want to remind everybody that anything that loses, anything that goes in a mania phase, like the one we've clearly seen with Bitcoin, and you've probably seen the comparison of the force of the uptrend in Bitcoin with all the previous acknowledged bubbles like the tulip mania, the Nasdaq, etc. And you know, it dwarfs all of them. I mean,
even silver and gold.
yeah, I mean, and from historical,
And what is very sorry to interrupt you.
No problem.
Interesting is that now when we have such, why said earlier that we probably won't see such a big recovery or a sharp recovery.
Yeah.
Because things with gold made, if we take a look on gold, let me take a look. Gold actually here made a very nice move to the upside and came quickly to the downside as well. Okay, but we are still not anywhere near to a new bullish phase. Okay, so markets after such mania cycles always need time to stabilize before they will recover. So maybe this will be just a temporary, as said, free wave bounce back towards 6,000, 7,000. And I really don't believe that we will see such a sharp rally like we have seen in 2017. The problem with Bitcoin was not maybe in price because it went to 20,000. It's the problem that it went to 20,000 in just a few months. That's a real problem. If there would be stable, solid, slow rise, that would be okay. That would be a normal rhythm of the market. But if you see something very sharp, very high in a very short period of time, then you know that something isn't right. So that was maybe in a few years, if Bitcoin will stay here, we will see Bitcoin at 50,000. But maybe that will take 20 years. Who knows? Because the S&P 500 was, or Dow Jones, look where we traded 50 years back. Right? So market needs time to recover with normal rhythm.
Yeah, there is though a very big difference, right? And the very big difference is, first of all, the first thing I want to say is that people should be careful because the market has proven that whenever a bubble pops, and you know, the rule of thumb for a bubble is anything that from its peak, anything that accelerates in that kind of a way, and then from its peak loses 80 or more % of its value, which is now the case for every single cryptocurrency out there, at least everyone that that existed like a year ago. And now I don't know, because we keep seeing new ones coming in the market, so some of them might not have had the time to do so. Second thing is that I want to remind people that gold, for example, has had phases of mania, as you said, Gregor, but gold has been money, has been real money for humanity for 6,000 years. So, you know, the two of them are not comparable because we haven't even seen. That's your daughter,
yes, I have kids here.
So we haven't even seen cryptocurrencies go through a single business cycle. So we cannot compare something that has intrinsic value and has survived as a form of money for 6,000 years with something that was created after the previous financial crisis and has not even survived a single recession, right? So people should keep that in mind. Yeah.
Yes, I was here. I was looking for kids now because I forgot to lock down the office. So
don't worry about it, mate. Anyhow, we've gone past the usual time. So thank you very much. I think we covered several markets. We got a very nice perspective from you. I think people know what to expect more or less. One last thing, because we didn't mention it, just a very fast comment. Aussie, USD, Kiwi, you expect more upside against the dollar as part of a correction?
I think that we may see a deeper correction, I would say, like this. And then we see, because gold, if I just a quick update here, if gold on a shorter time frame is going to see a fifth wave here, okay, and then we see a reversal, maybe even a sharper one, then Aussie dollar, I don't think will have any good chance to reach higher levels because it's very, very weak.
Yeah.
So I think that Aussie, I was looking for potential opportunity on the long side on Aussie Last week, unfortunately, I hadn't got any solid pullback, but at this stage, I just, based on where gold is already and where Aussie is, I think it's a little bit late. So Aussie could easily come lower once gold completes a 5-wave rise, and that's my concern with more upside on Aussie.
Okay, it makes sense, mate. And as we said, Kiwi might continue overperforming, but still, if Aussie completely rolls down, the metals roll down, it's not that Kiwi is going to survive. It just might sell off, in a softer mode, let's say, right?
Yes, for a 3-wave drop, yes.
Yeah. Okay. Thank you very much, Gregor. You're always welcome. We always value your input. Thank you, everybody, and we'll be back here tomorrow. Dale is going to be again with us back tomorrow. So have a wonderful rest of the day. Bye-bye.
Bye-bye.